Welcome to the blog for Tuesday, the 28th of August. So, this is day 57 of 65, the compound effect. Making forward progress every day, applying my engine method, and making sure I'm doing the little things every day. And it's all about having a vision, an end of year vision, or even a multiple year vision, but really being in the now moment and doing, making every day or every session really count towards achieving those end of year goals. And that's what this is all about. And I know moments or lapses of concentration and things like that can all of a sudden put you well behind the ball. You often hear of traders doing really well, but then sort of giving it back all in a short amount of time. It's an easy thing to do within trading. It really needs to be focused and concentrate, all the time. So this is what this is all about, and doing little things day in day out. As for the strategies, what I'm looking at the moment is never changing the core of the trading plan, that's for sure. And that's the idea is to be doing the same thing over and over. I talked about before with the compound effect, and by sticking to the same core strategies, and really cementing them in your mind and creating habits around that, where it becomes very systematic. That's the real key to moving ahead. But always looking at ways to bring it along so I can implement it a little bit better. And what I'm looking at doing is really creating a situation where I really separate the strategies, to a stage where I actually want to almost bring it back to two strategies. I think strategy one, continuing trend, where I got mid trend, looking for it to bounce off key levels, but I could also bring in the breaking the high and low trade there too, because what it is, it's a continuation of trend, just a slightly different way of looking at it, but it's the same sort of strategy, and I know those trades will never overlap or be looking in opposite directions. They're always looking at with the direction, and I'm always basing it on the current movement or direction of the market. Strategy two, I'd almost separate the very first trade they'll look at today, the directional breakout. What I'm doing at the moment is, I've got a few things today which I've been looking at. I'm really looking at creating something where I just give myself every little chance to get on. I think there's an opportunity most days at the beginning of the day. You've got to be very careful and very structured about it. And I guess you've got to find some way to trade it that suits your personality. But what I found is I really like the way that I've traded it and sort of the formation for it. But it's just not quite complete enough, and I'm leaving myself where I'm missing a lot of the opportunities, and I'm seeing these movements go by, and I've sort of got this structure for it, but missing a lot of them. So I just want to create something that's going to take advantage of that and give me a lot of a better chance. And I think I know I can create something that's at least a 50% strike rate and better, and where you're going for 10 ticks or more, and then the stop outs are say 5, 4, 3 ticks, and even a situation where I give myself two cracks at a day if it warrants that sort of thing, and that's what happened today. Because knowing that even two losses in a row, that could happen. You've got to be prepared to deal with that. Two losses in a row can be made back, and more with one winning trade. So I want to make that directional breakout almost a complete strategy within itself, and then strategy three, obviously mean reversion. Again, it's completely separate. It really is different to the other areas, and occasionally it'll start to overlap with other areas as well. But if I really segregate the strategies and almost trade them across three accounts, anyway, it's something looking in towards. So today was the same situation here. We're just up around this resistant level here. The market's getting some downward pressure at times. Just got this level down here. Just interested to see if the market can come down there and apply some pressure on this. The 15-minute chart shows a little bit better exactly what's happening over the last few days. So here's today here. This trend line's really starting to play out quite well. Now we'll use it as resistance a few times here, but then support all the way along here, and it keeps bouncing off it. And with this in the background and to the side, I saw the market almost to the tick bounce off this level here, and that was sort of the real momentum it got. It struggled to push higher, and there's this real level at sort of 14.10, 14.11, which I'll get to, but I'm surprised the market couldn't get back up through that. But straight at the beginning of cash market, we got this bounce off, and that was sort of the momentum, and sort of that was the leading direction of the day after getting that really good bounce and seeing the market just react, and indicating that there certainly is buyers around. Overall, we're in an uptrend. but certainly the pressure or the current sentiment is slightly on the downside. That they're trying to push lower. They keep on getting these pretty good downtrends, but just in this particular case here, there's certainly some upward momentum, and the 15-minute chart does a great job at providing that sort of direction. As for today, quite an active day for me. That's why I started thinking about separating the strategies as well and making them completely different. And even though they're based in the same market, when one strategy tends to be working, maybe one strategy is maybe failing a little bit, one other strategy will pick up the slack. It's almost like it's diversified a little bit. That might sound a bit strange because it's within the same market, but they are quite different strategies. So as for today, two key levels, 1408, happen to be the gap as well. It's always nice when you've got a key level that's also the gap. It really consolidates that particular level, and the market just reacted like to that 1408 all day long. And then down below here, 1403, we got a bit of a bounce off it. It's also the area of that trend line, so that was where the market really decided to head back up from. As for trading setups, 1, 2, 3, 4, 5 setups today. Pretty much everything I looked at got filled, bar this one here, and I'll talk about that when I get to that. So directional breakout, basically applying a new way of entering it, keeping the existing way, so keeping the breakout box where the market pushes through. Once it pushes through, use that sort of as a support, and then continue or resistance if it's on the downside. But incorporating, and I'll talk about this a little bit, a pivot strategy, meaning something that I have a lot of confidence in is my mean reversion strategy. So I'm taking that sort of theory or that sort of concept where the market leaves a pivotal point. For example, there's one over here which, so the market came back like this, tried to go higher. Now, if the market should go higher here, if it fails to go higher and it starts coming down and breaking this point here, and you got all the markets breaking that point, then it's a great spot to get a change in direction. So that's what I mean by a pivotal point. So what I'm doing is looking for pivotal points and within this very early direction, basically where the market leaves a point, goes away from it, but then if it comes back at that point with all the market support, looking to get on board that way. And so that's what I mean by a pivotal or pivot. So basically giving myself two ways to approach the directional breakout, still based on the same sort of theory, using the involvement of the other markets, breaking through support and resistance areas, but one's based on pre-market data, the other one's based on pivotal. So that's the difference between, in brackets here, P and B for breakout box. So to show it on the 1 minute chart, these dots here, and in my journal I draw them as a little P in a circle, and I call them pivotal points. So as the market started, we obviously pushed up here. Now if it come back at this area here and I saw all the markets, just with the head of steam, and I look over at the Russell and all those markets already breaking this pivot before the ES does, they'll look to sell here. Obviously it never came back and touched here. On the upside here, we headed back up, really pulled back. If we approached it again, which is just here, and all the other markets are breaking that same point, go with it. This particular one here, all the markets are there, but there was no one actually physically breaking it. So even though it went about 9 ticks, for me it just wasn't quite there. I'm watching the other markets, I've got them all marked, and it just wasn't quite there for me. Then the market looks like it should have gone higher. So even this had it gone up, this is, what I say, this had it kept on going, obviously for me it would have been a missed opportunity, but I'd given myself all the chance, and I was there ready to take the order, but just didn't have that confirmation for the other market. So I'm happy with that. It's not a situation where I'm sitting there with an order waiting to be filled and not getting filled in an area that works. So it's quite different. Now I'm relying on the other markets. I know I can place the order straight away that it's going to get filled immediately if I get that other market support, but it just wasn't quite there. And maybe that was the reason why it did come and turn around. And then once it came down here, got a bit of a bounce. This is all stuff that's happening quite quickly. It left a pivot point for me here, and I like it when it's like this, when all of a sudden this upside pushed up, failed, comes back down underneath this previous pivot, and obviously there's a real change of momentum. This can happen in this first half an hour market. It's constantly changing. Sometimes it just goes, other times it changes quite a few times, but within those changes it's very predictable if you've got a systematic way of approaching it. So this one here, the market popped back, and as it was coming back towards it, all the other markets were right there, or already breaking through. So that one here, I had a sell at 1406.50, and from there it went 10 ticks. So I got 10 ticks out of that one. And so yeah, 3 pivotal points. Obviously one never came back. This one they did test, didn't have the support. This one they test with support. That's the one I took, and took it for 10 ticks, and I think I've got a few things. Yeah, so this is sort of a mark in the same sort of region on the Russell. This is the one here. See, the Russell was hanging right back. This one here, the Russell had already broken through it. So it's just the 2 different pivots, but looking on the other markets. So directional breakout winner there. But before that, I did take a loss. So this is where I'm giving myself a couple of chances, knowing that there's a few opportunities here, and that's why I want to separate it as a complete strategy as well. I'm not prepared to go there and sit there and attempt it all day long, but I do want to give myself 2 chances at it, knowing that if it fails the first time, the second one has got a very high chance of working, and even if it fails 2 times in a row, it's something that can easily be made back if you're sensible with the area. Directional breakout, one that lost was based on the breakout box, so the market pushing up through this pre-market data, coming back looking to buy and get support and kick on back to the upside. So there's a previous area here where it should have really held well, where it normally holds well. This is it on the Russell. So as the Russell's coming back, like I'm looking to get in, and the Russell's still well up here above this equivalent of the breakout box. So all the other markets were sitting well above this area, so it looked like this pullback was something that was only going to be fairly shallow before heading back up again. That's the theory that it's based on. Obviously in this case it wasn't. This particular one I got out for 1 tick. It became obvious. Where was it? Around this region here. It came down, got filled, but just didn't get that bounce like expected. It sort of hung around the area, and you could see this downward pressure coming. So I was able to get out for just a 1 tick loss. So really want to look at protecting those areas too. If they're not working, because it's volatile areas, they should work quite quickly. Getting out, and that will really help increase the profitability. So 1 tick and then a 10 ticker, so it makes it quite a profitable area overall, even though it's 1 loser and 1 winner. So that's a directional breakout. It's something else I'm spending quite a fair bit of time and effort on with it as well. From there, we came down here, got a bounce, started heading back up. All of a sudden, this is where this market got a bounce off that really key trend line in the market at the moment, and obviously a key level in the market here as well. Started heading up, come charging up through this key level in the market here. So I've got it marked here. What I'm looking for it to go is through at least 6 ticks or more. It's definitely got momentum. Come back, bounce off this key level, and continue higher. There's an area that had a lot of momentum, so that's my version of 5-minute fade, or what I call the 5-minute momentum. Obviously, it just never came back. It just went straight through and never looked at the area again. From there, this market came back. But all through here, it just looks like it's just some sort of pullback. Even if it's getting back through this key level here, it's not going through it with any sort of power or momentum or anything. Moving average is still clearly pointing up the whole way through it. So I'm still always looking at buy trades here. If I was looking at sell, if it was some real aggression through here and the moving average is turning to the downside, I'd look for it to, which it was starting to do here, but it certainly never got to stage where it was completely pointing down. I wasn't prepared to take a sell yet, but if that price action was a lot more on the downside, I'd look for it to come through, come back, use it as resistance, and push lower. But not the case. I was looking to use it as support, so I just don't want it to come down and look for it to bounce here. That's quite an aggressive way to apply it. What I needed to do is come down. If once it can go through, which is what it did, but that can then get back above it by at least 4 ticks, come back, use it as a support level, and then go. So you can see that it's gone down through. This area here, you just saw a real kind of push through this level here. That really confirms the level. Put the order in to bounce off the support, and again, you can see almost to the tick. I was pretty much, the area came at that same spot as that 5-minute fade, which we tried taking the room, which the 5-minute fade there worked quite well. So I was buying off that key level. So that one there is, sorry, not 5-minute fade, 5-minute buy. So again, it's just my version of the 5-minute buy, and you can see in this case, sometimes it's quite different. In this particular case, it was very similar. It came up in pretty much the exact same area. So that was my 5-minute buy, 5-minute continuation. Went for 10 ticks. So from there, this market went up. It stalled. it tried to go higher again. So this particular area here, I could look at breakout trades, but I'm watching other markets, and the other markets are just not getting any sort of momentum on the upside. So there's certainly no setups for breakouts there. But if the market started coming back and putting pressure on this pivotal point here, and all the other markets were doing it at the same time, then look to take the reversal trade. So this one here had the order on there, all the markets were coming down this pivotal point and breaking it. So place the order on there. With exits, and exits is a very important part of strategies. Strategy professional traders will tell you that you should spend the same amount of time, if not more, on exits as entries. It's certainly something I'm spending more time on. I've spoken about at times pulling out some of my contracts at 5 ticks, or what is 1R, so whatever I'm risking, taking out some contracts when I make 5 ticks, because what that does is, rather than reducing my trade to a break-even situation, by taking out some of my contracts at 5 ticks, that automatically reduces the risk that obviously that I've got within the marketplace. Okay, so for example, this directional trade back here, this continuation trade that had a lot of momentum, I wasn't taking any contracts out earlier. I just wanted them all to go to my full profit target or more. This particular one here, it was obviously coming right into a bit of a support area, as in this key level and also the gap. And also the other markets were breaking this pivot, but some of them are just clear and obvious, and that you just feel like you just want to load up on. Not that I increase contracts on certain trades, but some are more obvious than others. This one here, was definitely an entry, a signal, but just didn't have the real momentum. The markets were breaking, but not with a massive amount of power. Sometimes you'll see the Russell just screaming through this area here, and that's when it really gets going and heading back to its lows. So this one here didn't have massive amounts of momentum, but in saying that, it was a complete setup, one that I'll definitely take according to my trading plan. But definitely prepared to take out 5 ticks, because I know that this one just hasn't got all the momentum in the world. It's got a chance of coming back. So what happens with this one here? Took 5 ticks out, and then a third of contracts, and the other 2/3 of contracts I got out for a couple of tick loss, but eventually came back. So overall, ended up being a tick winner or a break-even trade. But just my version of reducing risk. So I'm not essentially just straight away reducing my actual full stop out and giving myself a chance of being stopped before it gets an opportunity to go. But when it does go a little bit, taking out some contracts, and that's my way of reducing risk. My exit strategy. So from there, this market came back a few times. My stop was 1 tick above this pullback area here, so it was sitting just up here, 2 ticks above my entry. So it came back a few times and threatened to get stopped out, but then it kept on pushing back to this gap. Here it started pushing through, and I thought it might be on its way here, and certainly had high hopes for it, but just could never get through that gap and get any pressure through there, and eventually came back and stopped it out. So what I was looking at here is seeing this market. We spoke before how it got a bounce off the trend line down here, and you can see 1, 2, 3, 4, 5 times this market's really tried to get going and go through. Normally when it just comes back a third time, it's good to go. The fact it just kept on coming back just meant there was something there. A few times I was looking at the breakout, like this area here, looking at it, but it certainly wasn't there for me yet. Then we come up here, waiting for the pullback. It came again, so now I'm looking at the breakout trade. This time I got the blueprint. The 1 minute chart shows a little bit better. So here we are. This is sort of where we're dealing around. I could see 14.0950 was sort of this price. We're dealing. We got pushed up through it, came back underneath it. Where was it? So here. Sorry, where was it? Yeah, here. So here we got the real power through it. It's all this one here, especially, it's quite a good movement to the upside. All the other marks were hanging right at their highs, and right here, actually, the Russell physically broke this high point here. So that was a real sign that the market's looking to go up. Normally have the order right back on the support line, but I did actually get it at 14.10. I just gave it a little bit more chance, didn't want to be missed out, and came back, picked me up. This one here went 7 ticks. Had real high hopes for this one, so you can see that it's gone, and all of a sudden just came rushing back to the gap. It was quite extraordinary. But was able just to reduce the stop on that one and have a couple of ticks stop out as well. But you can see here it's going up, breaking. Didn't get quite to the highs of the days, but it's breaking all these levels here. All the other markets were starting to go. Thought this was its time just to really go. One of the ones was prepared to let the exits extend the exits and really get 3-4 points plus out of it, but just almost on a dime turned around and came back. So I didn't take any contracts out of that one just because momentum was certainly there, looking to let all my contracts go and just let them keep going. So unfortunately came back for a small stop out of that one. So quite an eventful day, certainly a lot going on, but like I've said other days, very much a process, very much systematic, and as long as you got that, it really doesn't matter how much is going on as long as you feel like you're in control. So that's a wrap up for Tuesday, and we're back Wednesday.